Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer. So now let's talk about silver premiums. Premium, for anyone who doesn't know, is the dollar amount above spot price that you have to pay for that specific coin. So let's say spot price is $20. If you have to pay $26 for that ounce, then that's a $6 premium. Every coin has a different premium. Coins like Eagles nowadays have up to 71% premiums, while other coins only have 40% premiums. Pre 2020, most silver only had a $3-4 premium attached. Very, very, very low. Until 2020, something happened. And did you know that Eagles used to be the cheapest coins over spot? I used to recommend Eagles to beginners all the time because they're just a bottom of the barrel coin. The design stays the same, very, very, very cheap. And nowadays, it's the exact opposite. Eagles, instead of being the cheapest coins over spot, they're the most expensive coin over spot. What happened? Well, the US Mint and the situation with Eagles is an entirely different category beyond any other mint. If you want to check that out or learn more about that, go check out the video I made 2 days ago talking about the US Mint and the terrible situation they're in. But regardless, every coin has a different premium. Maples have a different premium than Britannias, Pandas. I mean, it differs from coin to coin. Some coins are more collectible. Like Maples, the design stays the same every year. Britannias, design stays the same every year. But you have coins like Pandas, where the design changes yearly. Or Kookaburras, design changes yearly. Koalas. So it's more sought after because people want to get every year since they're different designs. That's called a semi-numismatic coin because not only does it have, it's sold for the 1 ounce inside of it, the bullion aspect, it's also has some type of numismatic value, collectible value. So it's called a semi-numismatic coin, aka high premium silver. But nowadays, regardless of it's a semi-numismatic coin, it's high premium. That's the craziest part. Even generic rounds have extremely high premiums. That's not normal. That only started in 2020 when the global situation happened. And it's only been getting worse because silver is becoming more scarce. People blamed Wall Street silver on premiums rising, but since the beginning I was telling everyone that is not the reason. It's because we are running out of silver and everyone's buying it. There's just not enough left. I mean, everyone wants a slice of the silver pie, but there's just not much pie left. Low supply, high demand pushes the price up. Not spot price because spot price is still manipulated, but the price you got to pay out of pocket is still rising, which is premiums. The price you have to pay is still going up, regardless of what spot price is doing. That's not from Wall Street silver, folks. And I kept telling everyone that, but they didn't want to listen. Everyone just threw dirt on Wall Street silver. Regardless, this was inevitable. We are in a massive silver shortage. The supply deficit is record breaking this year. I mean, we exceeded 1.21 billion ounces. The deficit was massive this year, and it's only going to get worse as we advance in this new digital era. For example, gold really doesn't have premiums. Look at an ounce of gold, you can get it for around spot price because gold isn't scarce. Regardless, I hope you understand a little bit of what premiums are and what can cause premiums. It's scarcity. So, on that note, since we have the context, since we have the backstory, let's jump into this article from Kitco News talking about premiums for gold and silver bullion aren't dropping anytime soon. That's from the LBMA. LBMA vaults and COMEX vaults are empty. LBMA is the London Bullion Market Association. COMEX vaults, even the LME, London Metals Exchange, all these vaults are empty now. So premiums aren't going to go down, especially with coins like Eagles, since the US Mint's in an entirely different situation with laws they have in place that won't allow them to pay above spot price. So, Sunshine Mint companies that get most of their silver from to make their coins, the silver planters, don't want to sell to them. So you're going to see premiums for all these coins continue to go through the roof since nobody can find silver. People think premiums are going to go back down once the dust settles. That is not going to happen. It's only going to get worse. So retail investors can expect to continue to pay high premiums for physical gold and silver bullion as precious metals markets deal with global supply issues and unprecedented demand. And that's according to speakers at the LBMA Global Precious Metals Conference. I love when people say, oh, premiums will go back down. No, not a chance to the slightest degree. It's only going to get much worse. Unprecedented demand, physical demand for gold and silver continued to dominate discussion at the LBMA's annual conference. And guess what? Guess what? Spot price is irrelevant. Spot price is irrelevant in today's day and age. Spot price is just a number on a screen, right? Let's like up here. See how it says $21.22 right here? That number means nothing to us because are you able to buy silver at this price? No. So this number is just a digit on a screen. The number that matters is the premium. And they can try to suppress the price of silver all they want, but if the premiums keep rising, then that means that silver is rising. You could say, oh, silver's still $21.20, but if that number has nothing to do with what we're paying out of pocket, then it really is irrelevant. There's more to it on the flip side if you want to sell, because you can still sell and make money if you're willing to rip some people's heads off. But regardless, let's just keep moving on for the sake of this video. So panelists expecting global uncertainty to dominate bullion purchases through 2023 and into the first half of 2024. At the same time, record flows from Western nations to Asia are also impacting the global supply chain that is still recovering from the global situation. Mark Woolley, Senior Vice President at Brink's Global Services, said that in 2020, at the start of this situation, the precious metals sector saw massive imports into New York, with more than 2,550 tons of gold delivered between May and of April that year. However, Woolley added that there's a new shift in the market, that metal now floating back into the east. The panel noted that India particularly seeing insatiable record appetite for silver. Yeah, Indian demand is insane, doubled this year. The flows from the U.S. have been unprecedented. The majority of the metal is heading east. And we're not just talking about investment demand. We're not just talking about people like you and I wanting coins and bars. And, we're talking about the tech sector, the industrial sector, what most silver is used for. You're not going to see gold as scarce because most gold is just used for the investment sector. It's used for jewelry and coins. So that gold just gets remelted into more jewelry and coins and kind of just stays in circulation, getting remelted down and passed around. Where silver is used in these electronics, and then those electronics gets thrown away into a landfill, and then it's never recovered. It's never recycled. So after 2 years of market disruptions, China is once again asserting its dominance in the gold market with record imports in the last few months. Woolley said that shipments into China this year should exceed inflows exceed what we saw in 2018. And at the same time, one of the directors said that India's silver imports are expected to hit record high of 10,000 tons this year, double the average annual import seen in the last few years. So then they go into some yada yada. So K-Shap noted that solid silver demand in India has pushed premiums up 25 cents compared to London market prices. Historically, that premium's around 5 cents. And by the way, speaking of premiums and speaking of silver prices, if you want to purchase from the best, most reputable company out there, respected, reliable company, the bottom left-hand corner, info@milesfranklin.com. Send an email to them. They will hook you up. That's the best company. They haven't had a negative review in 45 years. They're still one of the only few authorized dealers that works with the U.S. Mint, which speaks for itself. The U.S. Mint is banning everyone, which they did. They banned everyone purchasing directly from them. They only picked a few authorized dealers, and Miles Franklin is one of them. Andy Schechtman is the CEO. Send an email to the bottom left hand address. They will hook you up. Great way to build a business relationship with a company like that. I'm honored to be able to offer you guys that. Much better than just buying from some random site where you don't know who's behind the screen filling your order. So and look at this. The premium is 5 times compared to a normal market, and people are still paying it. So that kind of flow, and that's kind of the flows we're seeing, and we don't see any signs of this demand abating. So think about that. If people are willing to pay those premiums, then dealers will definitely not lower them because they're like, well, I mean, even if we just keep them at 70% premiums, why would we go any lower? We could only go up from here, and at least we have a baseline of 70%. So the scariest part is, especially since there's a lot of newcomers that aren't used to only paying a couple dollars above spot, that are used to, they're desensitized, thinking it's normal to pay $40 for an eagle if spot price is $22. Or, I mean, we even saw some people paying $50 for eagles on Amazon when silver was around $25, $30, buying them up like hotcakes. That's not normal. If spot price is $25, then paying $28, $29 tops, that was the price you would pay. But nowadays, especially since silver scarce, dealers are going to get away with this. And actually, on the flip side, on the contrary, you're seeing dealers beg their own customers to buy or to sell back to the dealers, and they're willing to pay record high premiums. If you don't understand what I just said, dealers, sites like Jam Bullion and Atmex, are sending out on their mailing list, they're asking their own customers to sell their silver back to them because these sites don't have enough silver. They're extremely low on their supply. They're trying to buy silver back from their own customers, and they're paying extremely high premiums. That speaks for itself. That should show you how serious this shortage is. Looking at the U.S. market, Terry Hanlon, president at Dillon Gage Metals, said that a massive supply and demand imbalance will continue to drive premiums for silver bullion higher. The number of ounces we move in silver is 6 times what we moved 3 years ago. In a normal week, normal month, normal year. 6 times. Then on the supply side, Hanlon said that products from the U.S. Mint remain the biggest hurdle in the silver market. He explained that the U.S. Mint has had issues getting silver blanks to make their coins. And yeah, if you want to know more about that situation, go check out the video I made a couple days ago. I broke that thing down. I dissected it. I went into every single nook and cranny and explained, uncovered, unraveled everything that has to do with the U.S. Mint having trouble finding silver. Why Eagle's premiums are so much higher than others. And then, like he says, and he quotes, the only thing he can see happening is premiums will continue to go up. And you know how many interviews I've seen with people of these dealers or these guys that saying, "Oh yeah, premiums they'll go back down soon." It's not the case whatsoever. Hanlon said that because of growing demand for precious metal bullion, his company has had to ship products from Turkey and Australia. Extra transportation costs have added to higher premiums. As to what is driving retail demand for gold and silver, Hanlon said that investors are looking for safe haven assets as global uncertainty remains high. Fear is what's driving the industry. Consumers are really afraid of their own currencies, and that is what's driving the market, as it should be. I mean, look at what's happening globally. Look at the BRICS nations: Brazil, Russia, India, China, Australia, Saudi Arabia, all these countries that are joining forces, starting a digital currency backed by physical commodities. And if you don't even want to go that deep into things, just look at the United States alone. We're in $30 trillion of debt. The dollar's lost 98% of its purchasing power, heading into a recession/depression. Nobody wants to keep their money in anything pegged to the dollar. And the best way to I guess alternate out of that would be physical gold and silver or crypto. And that's exactly what you're seeing happening. People and it's not even fear, it's people finally, you know, making sense of what they should be doing. I mean, yes, it's fear, but I think a lot of it is also just the truth being revealed in front of people and saying, "Yo, I'm out. I leaving my money away, in my bank account is basically just letting my money burn to the ground, just burn away as I sit here and do nothing." So they're taking control. While gold and silver have seen healthy physical demand, investment flows continue to dominate the price action, which has been in a solid downtrend through most of 2022. Then, however, some analysts at the LBMA retail conference said that investors shouldn't ignore physical demand, even if it is having little impact on prices. And that's very, very, very important. Remember, they're going to be able to deceive you with prices. Spot price is irrelevant. Think of this: investing 101. Low supply, high demand pushes the price up. Maybe not spot price because spot price is manipulated, like I explained in my last video, but the price that you have to pay out of pocket, which is premium, is still going to rise. You're going to keep seeing premiums rise. I hate to tell you that, but it's the truth. So you need to get in now before the curve, before mainstream media gets in, before your friends find out. You got to get in now before it's too late, because a lot of people will be wishing that they could build a time capsule, go back to the days right now that we're buying, and wish they could buy at these prices. I can promise you that. So yeah, that's what's going on with premiums. I tried to find a chart that explained or that showed actually what the premiums were over time. I couldn't find any data, but I do know the most recent data I saw was from Eagles, and it was showing each website and what their premiums are for Eagles. And the highest was SD Bullion, which had premiums at 71% for Eagles. That is insane. That is insane. And to think that people are buying them up like hotcakes is even crazier. And then to also note that the coins that have the highest premiums right now are Eagles, but those are the coins that used to be the cheapest. When I used to make a lot of beginner type videos, I would tell people to buy coins that are very close to spot price. Like generic rounds, generic bars, Eagles. I would always say Eagles as well because it was a cheap coin, government backed. But nowadays, that's the last coin I would recommend anyone purchase. It's just crazy how things flipped so quickly. So yeah, I'm gonna wrap this video up here. If you thought this video was educational, informational, at least entertaining, make sure to hit the like button. Right now, silver's price is sitting at, let's see, silver is sitting at $21.46. This is the 1 week chart, 1 month chart, 3 month chart. So yeah, a lot's going on. Hope you guys enjoyed this video. Make sure you stay tuned. I've been posting a lot of different stuff lately, so I do think it's important to stay up to date. You can't be blindly investing. You gotta be kept in the loop, and I got y'all. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.